Hello, everyone, and welcome to this episode of America. Guess what? There is one part of the US population that is going to revive spending this year, that is going to lead the American economy out of the crisis that we are in, despite high inflation, despite high gas prices, despite the complete re-engineering of the American economy. Older Americans, and you'll see this headline on your screen from the Wall Street Journal, older Americans flush with housing and stock portfolio wealth are poised to revive spending this year. In fact, consumers aged 65 and older are actually boosting their spending as Omicron fades, as the pandemic is now in the rearview mirror. They're traveling, they're going out to restaurants, they're going to hotels, they are doing things, they're spending money online, they're spending money in stores, and they are leading the revival of the US economy. In fact, COVID-19 kept many older Americans on the sidelines of the recovery, and that's why consumer spending declined. But they are back, they're eating out, they're traveling. In fact, their spending is picking up as the pandemic recedes, and a lot of analysts say that this will help the American economy recover in the months ahead. In fact, consumers aged 65 and over have increased their spending. Let's take a look at this graph on your screen. Spending by Americans aged 65 and over, which essentially was broadly lagging during the pandemic, is actually catching up. You'll see the blue line represents individuals from the age of 25 to 44. Green represents individuals 45 to 64. And the magenta line represents individuals 65 and over. And you'll start to see that consumers aged 65 and over have actually increased their spending more slowly than those in other age groups for most of the past 2 years. And this is according to data from Visa. And this measures the number of people boosting or cutting their spending compared with long-term trends. But now they're starting to spend even more money. In fact, what is happening is in February of this year, the spending index for those aged 65 and older rose above that of 45 to 64-year-olds and was just 3.2 percentage points lower than the youngest group, which typically tends to spend the most amount of money. So as you can see this graph on your screen, let's look at the right side of the graph, and you'll start to see that magenta line representing individuals 65 and over actually exceeded the green line, which represents the spending of individuals 45 to 64. So what is happening is that a lot of individuals who are older are now starting to spend more money. In fact, according to Constantine Yanalis, who's the assistant professor of finance at the University of Chicago Booth School of Business, Constantine said this: "We have this big older demographic. Their wealth went up tremendously these past 2 years," adding that with much more available cash on hand, it's quite likely that they're going to boost consumer spending, particularly on experiential categories. That means experiences like eating out, like traveling, like going on vacation, like staying on hotels, particularly on experiential categories that they've not been able to patronize the last 2 years. In fact, Sam Paglioni, who's a partner at JFS Wealth Advisors, said that his clients who are older really want to get back out there after 2 years of lockdowns and no travel that's bubbling up. Ukraine is definitely on their minds from a geopolitical impact and how it impacts markets. It paralyzes a bit. He said, however, so far we haven't seen a lot of people changing plans, and clients continue to pursue projects like installing a new kitchen or putting in a pool. In fact, the size and the wealth of America's older population has grown in recent years. Let's take a look at this chart on your screen that represents the wealth by age, and you'll start to see the wealth for individuals in the 55 to 69-year-old category and 70 and over actually improved at a much higher pace in the last few years compared to those who are 40 to 54 and 40 and under. You'll see the magenta colors represent the older population, and it's quite incredible that their wealth is actually increasing much faster than individuals who are younger and or just getting started in their careers. And a large part of this has to do with the growth of the stock market, the growth of their investments, and also the increase in value of their homes, which is comforting for individuals who are in their retirement years. Now, this is, of course, these are general trends. This doesn't apply to every older person, but again, these are general trends. So the number of Americans who are 65 or older increased by more than a third in the decade through 2019. In fact, they accounted for nearly 17% of the population in 2020, and this share is expected to rise to more than 20% by 2030. In fact, US household wealth, which includes assets like real estate and stocks minus debt, rose 38.1% among people aged over 70 compared to the first quarter of 2020 when we look at more recent data in the first quarter of 2021. Now, that's a slightly faster increase than the 37.1% increase in total US household wealth during the pandemic. In other words, we all started to do a little better, but older individuals started to do much better. And a lot of people are now starting to make plans, get out there, and essentially live life after after living essentially a cooped up existence during the pandemic. And several factors could actually restrain the anticipated pickup in spending by older Americans, because this is the flip side of the equation. Older and wealthier people in general tend to spend less and save more money relative to younger individuals. And obviously, younger individuals tend to spend more money. This is just a general trend that is consistent through the years. In addition, a wave of early retirements among baby boomers during the pandemic means that many older individuals have seen their income fall. Now, this means that a lot of older individuals do have more money. However, some of them, because their income fell, are not going to be able to spend. And some older Americans may actually hold back on spending because of higher inflation or stock market volatility because of the conflict in Ukraine. In fact, here's a quote from David Lang, who's a 65-year-old living in Ohio. He said he's concerned about inflation, but he hasn't changed his habits yet. He said, if the price of gas goes much higher, I might think twice about going for a long drive. We like to go for drives on the weekend. But he said that the jump in gas prices would have hit harder 10 years ago when he was driving to work every single day. Let me know what you think about this fascinating new phenomenon, if you will, from individuals, from older individuals who now are expected to essentially help the US economy move forward. Now, I want to be as clear as I can. This does not reflect the majority of older individuals. It's not like seniors are rolling in wealth. This is a general trend, and I know that there are pockets within our country where seniors are really, really struggling. And I actually live in New Jersey, and when I go to grocery stores and when I go to CVS, when I go to different, the Walmarts, the Walgreens, I see many older individuals working there trying to make ends meet. And in some ways, that may be the real America. Let me know what you think in the comment section below. Please click like, please click subscribe, please enable notifications. I appreciate you. And even if you're an elderly individual and let's say you have a lot of home equity and your house has increased in value, that doesn't mean you have money in your bank account, because at the end of the day, you're not going to just sell your house. Where are you going to live? Just because you have money, equity in your house, that doesn't necessarily make you rich. What makes you rich is having cash in your bank and being able to buy what you want when you want without having to worry about refinancing your house, or without having to tap into your home equity, or without having to take a loan or take on debt. And that again is a reality of America. Please click like, please click subscribe, please enable notifications. Thank you so much for watching. I'm looking forward to seeing you in the next episode of Ignition Time. Take care. I'll talk to you soon. Bye.